Andrew, I want to get your view on global equities. You're upbeat on them going into 2018, even as they look expensive. And going into the earnings season, what are you anticipating? Because we do have analysts quietly revising their third quarter profit forecasts downwards. What does this tell you?
I think your question sums up absolutely perfectly the two drivers for equities into next year. Valuations are a little stretched. Will the corporate cash flow come through? I think you're quite right that analysts have been downgrading their expectations. They often do that, though, at the start of the earnings season, this week with the US banks, and then, of course, over the next month or so, those numbers coming through. The expectations are now only about 4% or so I really would be quite surprised if companies can't beat that. But I think, particularly for the US market, the other factor we've got to remember is the likelihood of US tax cuts coming through and the impact that could have on US earnings this year and next year as well. Considerable debate, of course, about the size of the tax cuts, 1 or 2 trillion, what sort of issues will be covered, is it more personal or corporate? But I don't think we should forget that factor also as providing a one-off but important boost for US equities and therefore the global stock market into 2018.
Yeah, U.S. equities have been getting a boost. And Andrew, I want to share this chart with our viewers, #BTV822. What this illustrates is that we do have Asian stocks serving up a world-beating rally this year, but they're still considerably cheaper than U.S. equities. They're trading at the lowest price-to-book ratio relative to the S&P in 15 years. What does this tell you? Should we see more movement of positioning into Asian stocks relative to U.S. equities?
Well, I think we have been seeing capital flows out of America, both into Asian and into European assets, partly on valuation grounds for most of this year. I think that has stopped temporarily. It is one factor, I think, that's been sustaining dollar against the euro, for example, as those capital flows become a bit more two-way. And again, it comes back, I think, to the change of view about the possibility of US tax cuts. As and when that's fully priced in, then yes, I would expect some profit-taking in US equities to be seen, and people will be looking for more value. So individual countries across Asia and individual countries across other parts of the world that then appear relatively attractive, assuming, of course, that we're still seeing the global economy continuing to expand about 3–3.5% into next year, which I think is still very likely indeed.